Welcome to Venture Unscripted, a podcast where we talk with founders and entrepreneurs about their journey from 0 to 1.
Well, thanks, Mike, for joining us today.
Thanks for having me.
So you're the Chief Operating Officer at Connamara.
Yep.
And tell us a little bit about Connamara and what you do and kind of your background.
Sure. So Connamara is a custom software engineering firm. And what that means is that we don't have a product that we sell or a platform as a service per se, but we build what people ask us to build. So there's a lot of companies that do that. What makes us slightly different is that we really only work in the capital markets space. And for those that don't know what that means, which is probably a lot of people, when we say capital markets, we mean anything that is related to the trading of financial instruments. So, if you're familiar with the New York Stock Exchange, for example, you have an exchange where things are traded. You have brokers, market makers, speculators, institutions like you have investment banks, you have investment management, wealth management firms that transact on those exchanges. And there's a lot of software that is in between all of that. There's both the software that runs the exchange itself, and then there's the software that all of those participants use. And there's everything in the middle that goes from an electronic transaction to getting that cleared and settled so that the money changes hands and lands in the right account. So
does that include things like Bitcoin, like exchanges like that, like
sure,
crypto?
Yes, right. So there's the traditional exchanges like the New York Stock Exchange or the CME in Chicago or the CBOE or Eurex, London Stock Exchange. I mean, there's all the big established ones, but then there's also the upstart ones like the cryptos, and then also people that have novel products that they want to trade either in a regulated or unregulated fashion. If it's unregulated, we would call that like a marketplace.
Sure.
And then if it's regulated, then it's under the scrutiny of a particular organization. So if you're trading futures and options, that's the CFTC. If it's equities, it's the SEC. If you're trading swaps, so there's different instruments that are regulated by different entities, and that's all part of bringing something to market and trading it. The cryptos are generally unregulated, but there are people bringing novel products to market that the traditional exchanges wouldn't necessarily just up and list or buy that company until that company has maybe shown that there's value in that product, and that's where our sister company, Connamara Tech, comes in with our exchange platform. That's a place where someone can take those novel products that a traditional exchange might not list and go to market with that.
Sure.
So
how many, like, as someone that is not super well into the capital markets like you guys are with all these exchanges, how many, like, what's the size of the market opportunity for you guys? Of like, how many exchanges are there, like marketplaces and things like that?
So that's interesting. I mean, in terms of number of exchanges and the major ones, there's like tens of them.
Yes.
And then when it comes to like within a specific space where we're particularly expert, although we work across all markets and asset classes, because we're based in Chicago and we were founded by an options trader, we especially excel in the exchange traded derivative space. So that's futures and options.
Sure.
And within that, there's about 110 what are called FCMs, which is you can think of it as like a broker. So if you wanted to trade futures, you'd have to get an account at an FCM to be able to do that. Even as a retail trader, like we can go sign up right now.
Sure.
But there's also non-retail institutional traders that use those same FCMs. There's 100 plus of those, right? So so there's and then there's all the people that participate in those markets that use those entities.
Yes.
And so the exchanges are our clients, the FCMs are our clients, the banks, the hedge funds, proprietary trading firms, individual traders, and then people that have novel things they want to bring to bear against that landscape.
Yeah.
But then there's also that's sort of on the execution side to get trades executed. But then on the back end of that, you have what you call the post-trade world, which is after the trade occurs, how do things clear and settle and get allocated to people's accounts? So there's quite a lot of.
So it's beyond even the exchanges then.
It is, and that's where most of the action happens.
Yes.
And there's a lot of software that gets written there, and not just because, certainly because things have gone away from the trading floors. The guys in the colorful jackets yelling and gesturing, that's mostly gone away almost entirely, and that all has gone electronic. So certainly there was a lot to do to make that happen, but even without doing that, there was still all these other things that have to happen, and And in certain markets like derivatives, it has to happen every day because you close the books and reopen them every day. Every 24 hours, money changes hands, and it means that there's a lot of software and it has to work, and it has to work every day, and so that, it definitely is a smaller space than if we just said we write software for anything.
Right.
But I guess there's enough room there. There's enough of a market there where our expertise is important enough that you have to have that domain knowledge of those markets and how capital markets works to be able to deliver software into that space, and give your customers any confidence whatsoever that you know what you're doing. There's a lot of our customers, they can't just hire any software developer to do something. They need someone who understands
that space.
That has that vocabulary for capital markets, and that's what we do. And that's
I actually love that you guys have niched, because it's like it feels like a very good niche where you need reliability, you need security, you need high availability, like you need all of these things that other markets might not need, but you have a very unique skill set to bring.
And they might need them in a different way. If you're Facebook or something, you need massive uptime and scalability, right? But if someone's in the middle of loading something on Facebook and it fails them over to another server and they miss something for a second, it doesn't matter, right?
Yes.
And someone probably wouldn't even notice. They would just hit reload and just figure, whatever. Maybe the internet went out for a second.
Yes.
In our world, we're making transactions, it changes over time. We used to measure in milliseconds, then microseconds, nanoseconds, clock ticks.
Yes.
This is the level at which transactions are being made. Market data is being consumed and orders are being sent and executions are being received, and everything has to be right all the time. If it's not, it goes wrong really quickly. Now, it's not like in mission critical stuff like medical or aviation where if you make a mistake, people die.
Right.
But if you make a mistake, people lose a lot of money to the point that you could put a firm out of business by making a mistake like that. And you don't want to be the person that did that. So the other side of the coin of where we've been successful in this niche is our early adoption of agile development and test-driven development, and really rigorously adhering to testing in an automated fashion everything we do, because we can't afford to. We need to be able to put things out quickly, but we can't afford to
be wrong.
Yeah. And the other thing is that even though there's plenty of room in this market to sell software like this, it's a small world. After all, people know each other, and your reputation is everything. And if you were to be the firm that tanked somebody's,
right,
your algorithm went wrong and sent millions of orders, and your customer lost millions of dollars. You don't want that on you. So it's everything. And people do know each other, especially in the futures world. It's a little bit bigger when you get into equities and other assets, but in our world in Chicago, in futures and options, it's a small world. There's no room for that.
Right. Yeah. So when you guys started, and you've obviously niched in capital markets, which I think is really cool. Did you start that way, or did you kind of feel your way to that? Because it sounds like your founder had kind of.
So I guess let's do the origin story of Connamara. It was founded by Jim Downs in 1997 ish, 98, and Jim studied electrical engineering. He went to work at Honeywell. He did work for the CIA, and then he became an options trader in Chicago. So he traded. He was a market maker in the OEX and SPX options for 17 years, trading on the floor in his own account. Which even before the trading floor went away, that went away too. But he was an independent trader, so he's trading his own account, right? So every day, his car, his house, everything, it's on the line because you're trading in your own account. And he did that for 17 years. And one thing that he did was he took his engineering background into it, because to trade options effectively, you need to understand how to manage your inventory, but also how to understand the pricing and understand the movement of what's underlying and what's happening in the options. And you do that doing various forms of analysis that computers are quite good at. And so he wrote some software for himself early on, in the 80s. To do that, and into the late 90s, he kind of saw the writing on the wall that that electronic, trading on a screen instead of on the floor was where things were going to go. And so he, again, having an engineering background, but also having mastered the options market, he started a company based on that, and that's how Connamara got started. So from day one, that's what it's always been. I mean, there's been, I think, there's definitely been less than 5 and probably less than 3 projects that weren't strictly in that space. But even if they weren't, they're adjacent to it.
So he started in that space. Did he? It sounds like he built the software for himself, kind of at first, and learned, oh, this is something that I should probably pursue a little bit more.
Yeah.
Did he have a customer before he started full into this software business, or was it like you didn't have one?
No. It started off really as it was kind of, he didn't like start a company, hire 20 people right off the bat and get going. It was more like consulting at first, like pulling together some people that he knew to collaborate with. And by the time I came along in 2006, it was at the point where he was building it out. Like, let's start hiring people. Let's have our own team.
Yes.
Let's do more than one project at a time.
Yes.
Let's build it from there. And so that's, it started off very just, limping into it, and then it accelerated from there. But one thing that really did have an impact on him early on was we did an early collaboration with ThoughtWorks, which is where we learned an awful lot about agile development and test-driven development and behavior-driven development. And interestingly enough, a lot of this stuff, like behavior-driven development, comes out of, a lot of it comes out of the capital markets in Chicago. I mean, that's like, it's interesting how some of that stuff came out of there, because the importance of that was recognized for the same reasons I mentioned, that the correctness is important, but so is releasing things often. And so when I landed in Chicago in capital markets in 2006, having known nothing about it up until that point, I was surprised to learn about the wide adoption of open source software and agile and test-driven development. It was everywhere, and I guess maybe it shouldn't be surprising. It's not it wouldn't be surprising now, but back then that was sort of more edgy.
Yes.
It wasn't established as the thing that you did.
Yes.
But it was very much established there.
Interesting. And so that's a really neat origin. So that you had someone that was in the capital markets, noticed the opportunity, started to really consult, grew organically, it sounds like.
Yes.
And then now you guys are at a point in which the team's grown and you've built your own product. Tell me about EP3, right?
Yes.
I would love to hear about what was the kind of the moment that was like, hey, from the services company, we think there's an opportunity for this product, and developing the product. What did that look like? Right.
So what happened? So Connamara has been in business for 25 years as a services business. Around 2009, 2010, was the first time that someone asked us to build out a regulated exchange platform, which means that you build this platform out to accept orders, match them, send out executions, and then send things on for clearing in a regulated fashion, which means you go before the CFTC and you present what you've got, and there's lots of documentation you have to write to do this, and we had to learn this whole process about how to do that. And then that happened several more times. And because we're a services company doing work for hire, means that we don't really retain the IP. We're not building a product that we're selling to people. We're doing the work for them, and they
work
retain.
For hire.
Yeah, it's their work product. And so we realized that like many things we've built in this space, we've done this multiple times now.
Right.
So we have some residual IP, in terms of we know how to do it again. But we've done something enough times. There seems to be a market here, and we started to understand that there was a reason why people were asking us to do this instead of building it themselves or collaborating with an existing platform. And it's that
seems complicated.
Yeah. There's a lot to know. There's a lot to do just in terms of the paperwork and meeting the expectations of the CFTC if it's a regulated entity. And then there's the fact that the established exchanges, they're not really interested in taking a chance on someone's upstart product, because if there's not users or customers for it, you need to demonstrate that. And what's tricky about that in the futures and options world is that, futures in particular, is that you can't just, you and I could go sign up to trade futures, but it's not that simple. You still need the FCM involved. So if you create a new product that's going to be regulated by the CFTC, and it's a futures product, you need an FCM, at least one, that will list that product for trading and let their users trade it, and then we'll be able to clear it after the fact. And they're not just going to do that for nothing, right? That's work. It's effort. And again, if you go, I got 5,000 users ready to go on this thing, sign them up. They would do that, but they're not going to do it when you don't have that yet. And when you submit to the CFTC your application, it's 180 days before you get your decision back, which means the whole time, your burn is, it's running the whole time, because in order to submit to the CFTC, you have to demonstrate that you have the clearing relationship, which is going to cost you big money every month to pay a clearing firm to have a lineup so that you can send them messages for clearing. You have to have your infrastructure up. You have to be able to demonstrate that you can fail it over, both primary, secondary, and DR. There's all these things you have to be able to demonstrate that cost money, and you have to do them. And if you were to go out and build that, there's a huge risk in that. If you were to go and use an existing platform that, although they're not maybe interested in listing your product, they'll let you license their platform, you're going to be paying that license fee. They're going to want 2 to 3 year agreement. They're not going to want to customize anything. It's going to be very expensive. So there's just this missing piece here for people that had a great idea for a product, but just couldn't survive the runway to get, to this, even just the 180 days. Yeah. But to get to that point, and then to wait 180 days, there's something missing there. And so we realized this is what was happening. And so we, over time, we built version 1 of the platform. That's why it's called EP3. We built version 1 of it. We built version 2 of it. And version 3 is the one where we finally realized, okay, we really have this thing now figured out as a product. And then what happened was, we were still doing that inside of the services company, which is a very different company from a platform as a service company. And we carried on that way for some time. And we realized that, there's 2 things here. One, we're running a product company inside of a services company, and that's uncomfortable and strange, and it doesn't really work very well. And then number 2, it also means that the product doesn't stand on its own. It can be propped up by the fact that if we have the services business, right? Yes. It also means that we work on it when someone's available because they're not billing a client. Okay, work on this. So you're not really all in on it, right?
Can I pause you for a second? So the development of this within a services company, was that like just people's part-time? Like, hey, they're on the bench, get them working on this product, and then over a period of time, it's built up. Is that kind of the initial strategy?
Yeah. So that was what ended up happening. And actually, what we did was we steered into that, especially during like 2008, 2009, the financial crisis. It was a little bit of a downturn, and you're like, do we lay people off, or do we reinvest into the things that we believe in that have value? And so we poured into that during that time. 2013, around that time, we saw another little bit of a dip, and so we took people on our bench and we worked on that. And then around I guess 2016 to 2018, in that time frame, we really went all the way with it and said, okay, we're really going to devote
time and energy,
polishing this off, building this thing out. And then around that, after that time frame, right before COVID, was the time where we realized, okay, we really need this thing to stand on its own 2 feet, and it's got to have we're always going to be able to prop it up with people on the bench, and it's not going to stand on its own. How do we make it do that? And so we started getting busy figuring out how to spin it out into its own thing, which we did a year ago, last July, and so now it stands alone as our platform as a service company, which is a very different company. The Connamara Systems is an engineering company.
Yeah.
We do custom engineering. It's an engineering company. It employs almost entirely engineers and some business analysts, and that's about it. Connamara Tech, although there's still engineering needs there, the most important thing for that company is service, and support, and knowledge transfer, and all of that. So and selling it, right? That's what it needs.
Different business models.
It's completely different. So we still need to sell the services business. We still need.
Yes.
There's a lot of similarities, but that is just a fundamentally different thing than building custom software for somebody that they're going to take over. They're going to support it. They're going to.
It feels like one is maybe more dollars per hour. Like I'm sure that's your model on the service side.
Sell billable hours for a living.
Billable hours. Right. And the other side is like you're selling a product, which is just the package. There's different pricing involved. There's different
licensing model. The sales cycle is different. I mean, it's every. It's so. it's not that we didn't know this, but it's so clear now looking back at it,
Yes.
how much more sense it makes to not try to do both these things.
Was there some epiphany or friction moments that was like, was there a culminating moment that was like, we need to make this separate? Or was it just over time kind of the learnings?
Yeah, I don't think, it wasn't like it came to like an, oh my gosh, this is terrible, we have to do it. It's just that I think we saw it coming, and we just had to, I think we just had to commit to it and just go, you know what, we really have to make it, it's either going to live or die on its own merit. And,
Yes.
and up until now, like if we don't do it, we could just keep it humming along, inside the services business, and it won't ever die.
Yes.
But it will never also succeed tremendously. And so it was like you just had to let it go. It's like your children, like you raise them and they live at your house and you keep them close, and then eventually you got to let them go, and they they succeed or they don't.
Yes.
But you got to let them go. And so I think we just had to make the commitment to do it, and also to come up with the organizational structure to do it, because at the same time that we were thinking about spinning out this platform as a service company outside of the services company, we were also looking at how to better create the organizational structure within our own services company, because of the growth that we've had and the way that we want to build the company to last. As Jim, our CEO, would say, he said that up until about a year ago, he was building the airplane while flying it, right? Like you just kind of do whatever. You're just very reactive. You do whatever has to happen in the moment, and a lot of that is a startup mentality, right?
Yes.
It's like like this has to be done. Someone's got to do it. It might be you or me. It's like, It doesn't matter, and so you wear a lot of hats and you do whatever has to be done. And so we were right in the middle of trying to already think about that, solve that, and also for Jim, making sure that he's built something that it doesn't end with he retires and the thing falls apart, right? Like he doesn't want that would be the ultimate failure for him in his mind, and so he wanted to build something that would
Last.
carry on. Yeah.
Yes.
Because and also and it's in the book E-Myth, which maybe you've read.
Yeah.
It says that that if you have a business that depends upon you, you don't own a business. You have a job, and it's the worst job in the world because you're working for a maniac. So
Yes.
So Jim has taken steps as we've and part of the clarity of how to structure the services company came from spinning out. It ended up that one enabled the other, even though it felt like it made it more confusing. It made it more clear that how to structure the organizations in both, so that it doesn't depend on him, and that he has the right people in place to do that. And sometimes you just have to take that step.
Yes.
And so we built out an entire management structure at the services company that it hasn't formally existed in this way for most of the existence of the company, but now it does. And so I think in total, the spinning out of the other company brought into focus what we needed to do at the services company too, and really build out the structure in both places and make it make sense.
No, that's great. That's great. So you built this product, and now I'm sure there's a kind of a mutual relationship where the services company is alongside if there's customizations needed for the product. Is that an accurate statement?
Yeah, so although they do have their own resources for engineering, they can also use, they can leverage us to build out certain things, just as they would, they use other contractors too to do other things. But it really does stand alone, separate management of both companies, separate employees, definitely two separate companies, but still, of course, our services company is certainly in a good position to help with flex resources to do some customization work, especially for that. Like if a particular customer of that platform wanted a particular customization, then it's something that's easy to carve out and say, can you guys build that against the platform, and keep the core of the platform intact, but add some customization over here so that it doesn't, you're not crossing the streams.
I'd have to imagine too, there was definitely some learnings, because you guys developed this service company, and selling custom software is just fundamentally different than selling a product.
Yes.
So how did you guys bridge that gap of that understanding? Because I know a lot of people we've worked with, that's an area of struggle where they're a service company, they're trying to move to be a product company, and it's or add a product company, and it's like, how did you bridge that gap of like understanding how that worked?
We might have had an advantage there because we actually did it the other way first. So our chief revenue officer, Dan, came from a product company.
Oh,
So in capital markets, he's working for, and he built up the sales function at a market data vendor. So a market data vendor in the capital market space is someone who takes the data coming from the different exchanges and aggregates it, normalizes it into one feed, so that you can just get market data from that vendor instead of Bloomberg does this. Reuters are these like names you would have heard of, but then there's also these smaller ones all over the place, and there's specialized ones in particular markets. But they bring the data together so that you can consume it and get it from, you don't have to start writing to each exchange yourself. You can just get the fire hose. So he came to us from there. So he had to learn.
That's an advantage.
He had right. So he had a good Rolodex because he knew all of the same people that we know. But he had to learn how to sell what we do.
Custom software first.
Yes.
Yeah.
And that was a learning curve for him, right? But going back the other way to the.
He's like, this is home base.
So at first, when we were still had the platform EP3 within the services company before we spun it out, he was doing that. He was doing sales on that. But now we have our own head of growth at the exchange platform at Connamara Tech. But that was actually home base. For him.
Yeah. Oh, that's it.
But it was an interesting learning curve for him to have to really understand. If you're selling a product, I guess you can learn enough about a product and go sell it.
Yeah.
But to learn how an entire company does stuff and why it's good at what it does and how to sell that's
tougher.
Yeah.
Yeah.
Yeah. But he figured it out. It was interesting. We actually already went through that exercise the one way, so then it was
the other way was
easier to go back the other way.
So you were part of that spin-off then a year ago that happened, right?
A year ago last July.
July.
Yeah, a year and a half ago now.
Part of that spin-off. Yeah. What, for those listening, I'm sure there are some that are developing, there are services companies developing their own products. Mm-hmm. What advice, what learnings did you have from it to be like, avoid this, do this, don't do this? Like what would you say a couple or one would be from your perspective?
So I guess the first thing that comes to my mind is that there had been many times where as the services company, we saw something in an engagement with a client where we thought, they want us to build this system and it has this piece here. We'd like to keep that because we think that we could use that later. In the case of the exchange platform, that worked out. It's a use case of one. But there was many times that we did that, and we did that basically in exchange for either we did it for no cost to the client, and then we licensed it back to them for $1 or whatever, or we gave them a substantial discount to build it because they still wanted it built, but we wanted to keep IP on it.
IP, yeah.
I guess that's where you want to be careful doing that because we did it many, many times, and I don't know if I would do it again. It definitely worked out with the exchange platform, but those other and maybe the lesson isn't not to do that. It's that if you do that, then do it with the intention of actually taking the next step and try going all the way with it.
All the way.
Instead of just hoping that if you carve that piece out, that you'll be able to sell it again, right?
Yeah.
Because you won't, because you're a services company. You're not out there humping that thing. You're to everybody. You're running the services business every day. So I guess that my advice on that one would be either don't do it, but if you do it, then
have a strategy.
Yeah, have a strategy to actually take it, which is what we eventually did with the exchange platform. We didn't do it the first 2 times. The third time, EP3 is the one where we actually did that step, where we're like, we're really going to do it this time.
Yes.
So I guess that would be one. The other thing would be that I guess looking at our experience, I don't think it was a bad idea that what we did was retain our bench to use that time to build out those things. I think that actually was a good idea. Not just because we don't ever want to have to lay anybody off, just because we're in a downturn, and also because if you don't keep your bench in a business like ours, we're selling billable hours for a living, so it's hard to keep a bench when you're not billing the hours to hit the payroll for that. But keeping your bench intact means that when the next big thing comes along, the next big project comes along, you actually have the people to do it. So I think that could be a way to look at it for people that do experience that lull sometimes. And right now, in our business and capital markets, there's a little bit of a lull right now. It's the end of the year. It happens every year. Hopefully that's all it is. You never know. But it ebbs and it flows. It comes and it goes. I mean, during COVID, we couldn't hire people fast enough, right?
Right.
We almost had to turn projects away. You never want to do that if you sell
Yes.
billable hours. So I think keeping your bench intact and finding a way to, build something out like that, it's actually a pretty reasonable strategy if you can do it.
Right.
Keeps the bench intact, and maybe you get something out of it. But again, if you build it, intend to actually take it to the next step, right?
Yeah.
And then I guess maybe the third thing would be, again, from our experiences, when you do decide to do that and you do see that there is potential in what you've done, then I think don't hesitate to spin the thing out and let it stand on its own, not just because it will make the organization more clear, the structure of the organization in both places more clear, but it also gives you the ability to do some other things. It can depend on how your services business is organized, but it's easier to take investment and raise money if you need to or you want to, or to sell something that is a product that stands alone in its own
Separate entity. Yeah.
than a services company. If you buy a services company, what are you buying? You're buying the people. Right. Yeah. And as Jim would say, that they go down the elevator every night. So
Yes.
what are you really buying, right? Unless you just want to acquire them, acquire them to hire them. There's not much to buy there. Or
Yes.
if you want to buy the customer base, or you want to, put the competition out of business. There's
Right.
embrace, extend, extinguish. Then there's reasons to do it. But if you want to put your product idea that you've incubated inside your services company in the best possible position to succeed, then one of the ways to do that is to spin it out so that you can do a raise.
Yeah.
You can do a valuation of that thing on
Right.
its own, and that's one of the best reasons to do that at all, because the services business is so fundamentally different and doesn't enable you to go and do that.
I'd also have to imagine there was the component of, we've heard from a lot of people trying to do what you're doing or have done, is there's a real gravity of the services company. That's the way that people describe it, is like there's a gravity, right? Because if you get a project and you have this bench of trying to develop this product, well, if you're so busy that the bench is thin, it's a good problem to solve for the services company because you have no bench. Well, now the solution of we're going to go build this product when you have no bench becomes very challenging. I'd have to imagine that's also
It is a reflection of the same problem that our clients have and why they hire our services company. Imagine you're a bank or a broker or anybody really. You have developers on staff. You have software that they've built that's in production that they support. And it could be anything. It could be line of business software that's, unexciting, enterprise, whatever. Or it could be the kind of software that, like our clients that have trading applications and other things that are running, their team is the ones, they're the ones that built that stuff, and they're the ones that are on the hook to get pulled into supporting it and care and feeding of it and maintaining it, and it's in maintenance mode, but they're every single day they're keeping the trains running on time. If the organization decides to make a strategic play where they want to build something new that's strategic to their business, and they try to use the in-house team, it's the same problem. They're trying to build the strategic thing, which is like building the product inside of the services company, but the team keeps getting pulled away because they're doing the work that keeps you in business every day. And so you can't do the strategic thing. So how do you do it? Well, you hire an outside firm to come in, do the strategic thing. Why? Because they have the expertise, and they can't get pulled into running the bank because they don't know how.
Yes.
They don't do that.
Yes.
So you can recreate that same problem inside your own company by doing that. At the same time, if you do have the bench, you can take advantage of it. But yes, you can recreate that same problem.
Yes.
That it's just never going to get the attention it deserves or that it requires to be successful because everybody's busy running. Yes, everybody's running the bank.
Yeah.
There's billable hours to sell. We want to sell as many of them as possible.
It makes perfect sense.
Yeah.
Awesome. Any other things you would kind of end on? You want to emphasize?
In general, about software engineering, capital markets, Connamara Tech, companies, products, services. I think, I guess since my daily bread comes from the services company, I will say that there's something that in the end, writing the software becomes the easy part. It's everything else that becomes a challenge. Your customers, your employees, things don't always go well on a project. Sometimes the sales just aren't coming in. There's all kinds of challenges around the organization that any organization has. But I think for our services business, the thing that I always remind myself when something is challenging or something doesn't go the way that we wanted it to go, I always remind myself that without the people that work for us and the customers that we work for, we don't have a business. So anytime, those are the two sources of my stress and things that come up, but I remind myself that without those two things, there's nothing.
There's no business.
So, so sometimes it's not easy, but you remind yourself that's what we're here to do. And so I think that if you always focus on that, in a services business like ours, then eventually it will work out.
Yes.
And you'll have satisfied employees and satisfied customers, and that's what I remind myself that at least once a day.
Yeah, that's good. Keep your focus in the right spot. So,
Yeah, the rest will work itself out.
Yes, exactly. Cool. Hey, thanks for your time, Mike. Really appreciate you coming on and sharing your wisdom of all the journey you've been through with Connamara, from a services company to now a product. And yeah, you guys got a good thing going on, and it sounds like you're got your hands full with a lot of things.
Yep, here's to another 25 years.
Yes, exactly. Awesome.
Thanks for having me.
Yep.